That report from Walter Mwesigye will be our point of conversation, and let's now explore this further, examining the wins and the losses in this announcement by China and how does this impact Uganda as a country. Joining me in the conversation is Robert Tenywa, an economist. Good evening to you, Robert, and thank you for joining us.
Yes, good evening to you. It's a pleasure to be here.
Thank you. Now, let us start by picking your mind, because I'm sure you've been following the relationship that China has had on the continent. Yes. You realize that this tariff policy for Africa began in 2021 and has continued to 2026. And we've seen reports suggesting that over 9,000 products are now included in, this partnership or this deal. And so, is it that China has the best interests of Africa at heart, or is it another agenda altogether?
Yes, I would say there is no country that will come out and there is no benefit to it. But to look at it in one perspective is to say that both parties will benefit from this sort of agreement, particularly on the side of Africa, where that it is looking for more bigger export markets, and we see China with a very huge population of about 1.4, a GDP of about close to 20 trillion USD, so meaning that there is quite a number of opportunities at large. But then on the other hand, China is seeking to establish contact or grow its diplomatic ties. We have 54 African countries, but only 53 were the ones that received that. Why? We see that Eswatini was excluded from this policy because it acknowledged Taiwan as a country, which obviously we know that Taiwan and China are not in terms. So that shows that China is not only looking at trade, but it's also looking at diplomatic ties. It's looking at growing and having more close relationship with African countries.
Okay, now we often hear that there is the tariffs are down, but the walls remain high. And if, for example, looking at the conditions that China is putting, the stringent measures like we've heard from the report, if one of the countries does not meet the standards to that effect, does the zero tariff, offer a tangible market?
I would say, I would just give an example to look at. Let's look at Uganda. Actually, previously, this policy first started with the least developed countries, which were 33 African countries, and Uganda was part of it. So Uganda joined this policy in 2024. It's just that now more African countries are joining to 53 in 2026, meaning that we've been always having this opportunity. But for 2 years now, but has it benefited us? So that's the question to ask. So it goes a long way to show that even if the tariffs are removed, there are other important measures that have to be put in place, such as quality, logistics, production volumes. Do we have the capacity to grow and to have more products and services that we can offer to the Chinese market? Or are we just going to, celebrate about the zero tariffs and do not take on the opportunity? Yeah. And so
that shows that it is not a free pass to actually have Africa's goods on the shelves of China's markets.
The only opportunity this policy does is that the price that you would charge in the Chinese market, let me give you an instance. You have a product. If there is a tax on that product, it means that you're going to increase the price that you charge on that product. But if there is no tax on that product, you would sell that product at a lesser price. So what does that mean? That when you're taking it to China, you would be your product would be more price competitive than other products that are in the Chinese market.
But it is not guaranteed that it will actually enter the market.
Yes, it will. It is not a guarantee. And also issues like quality, issues like production volumes, issues like logistics, all of those have to come into play. This is just one step forward that for African countries that we have been able to have that open door, but we have to now take measures to utilize it in full.
Okay. Now, by 2026, over 30 African countries are part of China's Belt and Road Initiative. And so what does this continued expansion of the zero tariffs, tell us about the future of Africa's role in China's global ambitions? Is it creating a permanent economic zone on the continent?
Yes, I think one way to look at it is that the benefit from both the parties, as I've said, and what is China looking at? As I've said, recently we've been facing, or we've seen the recent trade wars stemming from the United States of America, and how all parties, most especially the African continent, was also affected. China, Europe, Canada, and the rest. We saw the removal of the AGOA Act, the African Growth and Opportunity Act, where Uganda was benefiting, exporting to the United States. All of that now signals that there is a change or a turn of things. What does that mean? That means that now African countries or different parties are looking for more trade partners besides, or not necessarily trade partners, but partners besides the United States or the Western countries. So that signals that countries are trying to reroute, countries are trying to find alternative export markets, countries are trying to find better diplomatic ties such that they can move away from the traditional Western countries and build economies that are more stable, self-reliant, and that also depend on emerging countries. Yeah.
And now looking at our exports that we have been, making, is we entirely rely on raw materials like oil, gold, copper. And so with the introduction of the zero tariffs, doesn't it in a way limit our opportunities to, increase the value chain?
Yes, that has been a great impediment to our export value. Because if you're exporting raw materials, that means that you're not going to get a lot of money from them. For instance, coffee, one of the other products that we export so much to the Chinese market is fish. If we export the material as it is, that means that we're not going to get so much. So even if the opportunity is there, even if the open door is there, we're not going to get so much value from it. I'll give you an instance. Now we see that between 2024 to 2026, the export value between Uganda and China has just only rose by $40 million. So that means that there is not so much of an exponential growth as we would expect, unless we work on measures that we can put, such as value addition, such as logistic, making sure that the products are well exported to the market, such as increasing the production volumes and the like.
Okay, so as we conclude this conversation, as it is, Africa's debt to China is approximately $170 billion US. And these Chinese loans are often tied to, large infrastructure. So while it is offering these trade benefits, does this in the long run increase Africa's debt burden?
As in the short term, particularly for Uganda, our debt burden is increasing and our interest rate payments on that debt burden is increasing. And from basing on the statistics, we see that Uganda is more heavily borrowing. But what does that mean for the sort of the ties? It means that China is having more closer relationships with such African countries, and it can use now that opportunity to now bring its own agenda, such as the loans and the labor, or exporting, getting minerals such as oil and gas. By the way, one thing to note, 20% of oil and gas was coming from the Strait of Hormuz, and most of the oil that was coming through that strait was utilized by China. So it can also sort of signal something that China is looking for minerals elsewhere, or maybe oil and gas elsewhere. So that would mean that if we are not strategic as the African countries to position ourselves to benefit, but not necessarily put ourselves as slaves, we can benefit from it without endangering our resources, without putting our resources up for sale, and without increasing our debt.
All right. Thank you, Robert Tenyo, an economist, for helping us to break down that announcement by China. And we all now know what is in for Uganda as a country. And with that, we stop for another break. When we return, we'll be hearing from the world of sport.